Hey, Bulls and Bears, what is happening? JJ here, back with another dose of economic reality. You're watching Bull, Boom, Bear, Bust. And as usual, we have a lot of economic financial news to get into as we continue to document the slow motion collapse of the U.S. economy and the U.S. economy and most of the world's economy. What we're seeing now is a little bit of a lull as far as the bank panics go. There's actually a slight uptick in deposits with many of the regional banks. That caused some of the stocks to get bid up or bought up. But I definitely think we have not seen the end of the banking scares, that we've seen. And let's get into some news here. The markets were down today. All major indexes down just slightly. Dow Jones down 0.3%, NASDAQ down 0.24%. All of them were down fractionally. And the supposed fear was now that there's going to be a stall or a pause in the debt ceiling talks. Now, we have been reporting here how Janet Yellen has been out there warning people by June 1st we could default if a deal is not passed. People won't get their monthly security checks. And, you have to ask the question, we were told many years ago, Social Security's fine. There's no problems. Then it came out that, okay, Social Security is going to run out by 2030. And now we're hearing that the checks are going to stop after we can't raise the debt ceiling. It doesn't make any sense. I thought it was funded until 2030. So somehow, some way, people have believed all of these lies over the decades. And you have to ask yourself, what other lies are being hidden that we haven't found out yet? Well, we know the entire banking system is insolvent. That's one big thing that most people still don't realize. The banks are loaning out money they don't have. And look at the debt ceiling in itself. I mean, you've got to continue to print money out of thin air to raise the debt ceiling endlessly. Otherwise, the whole system collapses. The entire economy freezes up. The Social Security people that have paid in their entire lives will not get paid without endless debt. And keep in mind, endless debt's only possible with a fake money that's not backed by anything that they can create at the click of a mouse, create trillions of dollars. Fiat currency ever since 1971 when we got taken off the gold standard. Imagine where things would be without that. Things would be a lot better, actually. I think home prices would be about 90% less than they are now. Car prices probably close to 80-90% less than they are now. Less people living in debt, more people retiring early, more people working hard for 10 or 15 years and just not having to work anymore because the cost of living is so little. Now we see people working until they're retired, and then even when they're retired, they're barely scraping by, even though they worked their whole life. And millions of people out there right now are worried that they're not going to get their Social Security check. So think about how the fake money has allowed this cost of living to get where it's at right now. So before we get into the other news here, speaking of fake money, hedge now with real money. Let's hear from our sponsor real quick. You can hedge against this. You can also, I think, gain a lot of wealth once precious metals are reintroduced as money. So hear from our sponsor. We'll get you on the other side. There's no denying it. Gold is hot right now. Prices are soaring, and experts are predicting even more to come. Not so long ago, gold reached its all-time high of $2,069 per ounce, and now it's inching even closer to that number again. Bank of America, one of the largest banks in the world, is saying that gold will rise further still to over $2,200 an ounce later this year. So what, right? Well, gold is already a safety net for your hard-earned money. And now when the stock market is all over the place and the value of the dollar is uncertain, being safe counts like never before. Noble Gold is offering a free 5-ounce America the Beautiful coin for any qualified IRA or 401k rollover. Terms apply. A solid silver U.S. Mint issued coin celebrating our national parks, free with every qualifying precious metals 401k or IRA rollover. You can't go wrong with Noble Gold investments. Call 877-646-5347 or go to bullboomgold.com. That's bullboomgold.com. Link down in the description of this video. All right, so what else is happening? Let's talk about Netflix real quick. Netflix saw almost a 10% surge in their stock price today. We reported a few months ago that they were going to start cracking down on the password sharing. The stock, though, is about 365 today. The peak in 2021, around November, was $678. So we're still right around half of what it was at the peak. I wouldn't be buying into to Netflix stock right now, or any entertainment type of stock, because pretty soon, I don't think it's going to be long, pretty soon, people will not be able to swipe their credit cards and spend it on needless things, or spend it on wants, right? So you want something, but you have to have. It's going to be mostly the have to have items: food, shelter, energy, and even a lot of that is wants, right? People burn up a lot of gas by going on vacations that they don't need to go on. But I think we're approaching a time where the average U.S. household is going to have to stop spending on unnecessary stuff. I I don't think Netflix is worth it. They kept raising their rates. We had them for a couple years. They kept raising their prices, and I don't even know what it is now. I think it's 15, maybe even more than 15 a month. The last time I used an app to watch a show, it was a free app called Tubi, and spelled Tubi, and it was a great selection. Actually, I thought the selection on Tubi was a lot better than Netflix, and it was completely free. You had to watch some commercials. I think maybe 2 minutes worth of commercials every like 15 minutes or something like that. Not bad for a free app. But people are still putting money, spending money on things like Netflix, and I didn't even think their shows were that good. But let's jump over to the housing market. Home prices in April. Now we know that approximately 7 out of 10 metropolitan areas increased in the first quarter. That's January, February, March. Now, when you look at things as a whole, April was not so nice. April, prices dropped the most since we've seen since 2012, most since 2012, the biggest drop we've seen since 2012. And this is, I think the tip of the iceberg. Even investors have really backed out of the housing market. As an investor, do you want to buy a home knowing that most of the population is buried under debt right now, that most people are living paycheck to paycheck? Not a smart time to be investing in real estate, in my opinion. Sales have really plunged, though. A lot of people expected more inventory to come on the market. I can point to tons of YouTube channels that said there's going to be a housing crash because inventory is going to surge. So far, that hasn't happened. We've got a severe housing crunch. And what does that mean? Too many people and not enough homes. Just the opposite of what most people happened. Here in California, homes would have to drop at least 50% before I think it would be a good idea to invest. With the shape of so many people right now, I wouldn't want to be a landlord right now. Actually, I sold an investment property back in 2019, and after that, I questioned myself a little bit because we saw home prices skyrocket in 2020. I'm like, dang it, I sold too soon. But what would have happened if I would have had a non-paying renter? I might have gotten foreclosed. I couldn't kick the renter out because of all the laws that we had at that time. So it was probably a good move. And now that I look back, but for a minute I was kind of kicking myself because home prices went up so much. But I wanted to pay off debt. I wanted to get out of debt, and I did that. So no regrets. There's always the opportunity, but there's always risk in whatever you do. Let's talk about Ray Dalio. Ray Dalio says the debt ceiling debate sets the stage for, quote, disastrous financial collapse. Well, he's not the only one. Even Janet Yellen's out there saying a devastating collapse. Now, I would be very surprised if they didn't pass or get a deal done on the debt ceiling, because who's going to sit there and let the entire global economy crash on their watch, knowing that they're the ones that didn't pass the debt ceiling or didn't vote for the debt ceiling to be increased? I don't think anybody's going to do that. Maybe they set up some fall guy so they can blame the entire economic failure on one guy. I don't know. I mean, anything's possible. But I seriously doubt that they're not going to come up with an agreement on the debt ceiling. Foot Locker shares crater as consumers pull back. So it's interesting. We're seeing people still spending money on Netflix, but we're seeing places like Foot Locker saying that consumers are pulling back. So are they pulling back on shoes and staying at home? And because they're staying at home and watching Netflix, they don't need shoes because they're staying at home. They're not walking around. a lot of this stuff is just interesting to think about. How people are spending so much money. Look at the NBA playoffs around right now. Stadiums packed full of people buying tickets that cost, depending on where you sit, right? Hundreds of dollars down in front, thousands of dollars if you're talking about like a team like the Lakers. Nosebleed seats, Lakers are still, I'm not sure what they are, $50 or $60 from what I understand. Some less, but people are spending money watching people throw a ball around. A lot of these people are in debt. I mean, even before the fall of the Roman Empire, we saw a lot of the games and sports they had way back then. Stadiums still packed full of people. People, I think, go to entertainment even more sometimes when times are hard and when they're depressed about their financial situation. People just don't mind going into more debt just to have a few hours of enjoyment and to watch Netflix. But when it gets to a crisis point, people are going to have to. They're not going to have any choice. They're going to have to make a choice between eating a meal and being entertained. And I think we're headed in that direction, and not in the not too far distant future. Unfortunately, I don't like to make predictions like that, but I think that's what's going to be coming up here in the not too distant future. Maybe even before the end of 2023. It depends on how things play out. Of course, I've always said prepare for the worst because I don't like to put timelines on things. I don't have a crystal ball, and there's so many ways that they can extend this, kick the can down the road, so to speak, extend and pretend, bailouts, print more money, rescue programs. Nobody has to pay rent. Nobody can get foreclosed. Nobody gets their car repossessed. Nobody gets their power shut off. We saw all those things happen after 2020. So nothing's off the table, right? They can do so many things to keep this thing rolling, keep this economic corpse, looking like it's still alive. You know what I mean? Fed Chair Powell hints at a rate pause. So wait a minute. I thought there was a fight against inflation. Inflation is still up over 5% year over year. The target is 2%. So they're nowhere near their target, but yet we're going to pause the rate hikes. Something's not adding up there. So are they really trying to fight inflation? Right? We told you this from day one. We told you it doesn't make any sense because if higher rates were the key to stopping inflation, why do tiny rate hikes? Why do 0.5% or 0.25%? Just go right up to 10% if that's the solution, right? We knew it was all BS. We knew it was all BS from the beginning, and now we have the Fed out there saying, "Oh, we might pause the rate hikes," even though they have failed on the fight against inflation. Very interesting. Here's an interesting story. San Diego suing SeaWorld, right here where I'm at, San Diego, for $12 million for late rent payments. So in 2020, 2021, when things were shut down, SeaWorld didn't agree with it because they lost so much business. So now they're not paying rent. So they owe at least those 2 years from what I read here out of NBC7 San Diego. Very interesting, right? But they showed profits. They showed strong profits. The city's arguing that SeaWorld has the money. They're just not paying it. So why would they not pay it when now they're going to get sued by the city? It's pretty interesting. Is something else happening with SeaWorld that we're not aware of? Because if they had good earnings, why wouldn't they just pay up, right? So it's pretty interesting. I quit going to SeaWorld. We had season passes back, I think 2018 or 19. And it was actually not much more for a whole season pass versus just buying tickets for the whole family for one day. It was like maybe 30 something dollars more. I was like, okay, why am I going to pay this much for one day when for $30 more we can get a whole season pass for the whole year? And that particular year we ended up going a lot. It was fun, but it's just kind of weird there. They had to scan my finger, put your fingertip on a scanner to get inside. They take your fingerprints. I didn't like that, so I doubt I would go back to SeaWorld. Plus, they've raised their prices since then. It's even crazier now. Here's a number here that was kind of shocking, but not really too surprising. Theft is costing retailers now, these combined. In our last report, we talked about just Target. But combined, theft has cost retailers $100 billion with a B. That is billion dollars. Folks, the economy is continuing to deteriorate. People are getting more desperate. That's why you're seeing more of these retail thefts and many more losses out of retailers. It's going to keep prices high for many goods and products. Real quick, though, back to home prices. Home prices dropped slightly in April, and we're down 1.7% compared to April 2022. So not a very big drop at all. Where's the affordability at, right? With high mortgage rates, everybody expected to have a major correction, a major crash in the housing market. It's not happening. So please let me know what you think is happening down in comments. Why are home prices not crashing? You know what I think. I think there's too many people, not enough homes, supply and demand, and there's still too many banks out there that are guaranteed life support, loaning out money that they don't have, keeping the bubble inflated. Yes, it's deflating, but it's not crashing like I think most people had predicted. So you have fake money, you can keep bubbles inflated for longer than most people think. And that's what's happening. In 2008, remember, banks really pulled back on the lending. They didn't have that guaranteed life support back then like they do now. I think that's one of the big bases and the key to what's happening right now. It's the fake money, it's the guaranteed life support, the too big to fails, the mega banks, causing so much economic imbalance right now with these bubbles, cost of living being way too high. It all comes down to the fake money, folks. Hedge yourself, keep stacking. We'll see you back here on the weekend. Please like, subscribe if you like this channel, if you like what we talk about. Big blessings to all of you for being here, for showing love to myself and this channel. Hope everyone's doing well. Maybe we'll see some of you or talk to you down in comments. Big love. Keep stacking. Bye for now.